Hello and welcome to another episode of IPO KYC, where we decode the pros and cons of an upcoming IPO before you invest your precious money into it. Today, we have with us the management of Tata Capital. They are India's third largest diversified NBFC in terms of size, gross loans at 2.33 lakh crore, and they're hitting the Lal Street with a whopping 15,000 crore issue. Joining me is Rajiv Sabharwal, MD and CEO of Tata Capital. Rajiv, great to see you. So while you are India's third largest NBFC by size, not by profits, between FY23 and FY25, your NII doubled. 5,300 became 10,600, but profit growth was only 20%. NIMs at 5.2% lower than peers. I mean, what do the next 2 to 3 years hold for Tata Capital?
So if you look at our past, we've been growing over the last 3 years at 28% on our books, and our profits have grown at a faster pace. There was an impact which happened because of the merger. But if you look at our growth rate, in the future, we do believe that there is a potential for us to follow the similar path. Our book is pretty diversified. We are present in all segments of the business, and that helps us provide multiple engines for growth and keeps the book fairly diversified and good on the risk side too.
Let me ask you on your yield and advances. At 12.6%, it's lower than peers. Bajaj Finance is at 16.7, Shriram 17.8. Why is your yield and advances the lowest in the sector, or amongst the lowest?
I think you have to look at it from the context of mix of assets and the credit costs. Both of these things are extremely important. We have chosen a path of having a lower unsecured book, which we believe keeps the book more resilient in difficult times, and it also allows us, the mix of products allows us to have multiple engines of growth. We do believe that our credit cost, which is the lowest in the industry, allows us to still have healthy ROAs despite the yields being lower. Another thing,
Yeah. So is this a conscious choice to keep yield and advances at these levels? I mean, are you a risk averse or a conservative lender?
I think we are more balanced towards growth and risk. That is how I would put it. While, as I mentioned to you, while the growth rate has been amongst the best in the industry, the credit costs have also been the least in the industry. If you look at Tata Capital before the merger, our credit costs have always been below 1%.
Okay.
And that we do believe makes a right combination of growth and risk.
I mean, what is the outlook on your yield and advances and your credit cost going forward?
So if you look at NIMs and fee, as we talk about, because that's the ultimate parameter of what your earnings are on the top line, they are a function of yield as well as cost of funds. I do believe that in some of the new products which we have launched, for example, we got into affordable housing, and we are already among the top 2 or 3 players in affordable housing. Because of this, the yield is moving up on the housing business. Similarly, on the retail side, we've come up with some new products which are giving us better yield. So we expect the yield to look on the positive side. Cost of funds, I would give credit to RBI to make the repo rate lower, to make more liquidity available in the market, which is bringing down cost of fund. I think a combination of better yield and a lower cost of fund will make the NIM expand. The other thing which is very important in this business is also fee. That is another area which is positive for us, because we have certain products on the fee side which will and are giving us better fee income.
So what's the target NIM in mind? You're currently at 5.2%.
I think when we look at the past, we have seen a steady growth in NIM happening. We do expect for us the future to be similar to what's been there in the past, the trajectory to look similar.
But do you think you can get to where, say, a Bajaj Finance is or a Shriram is, which is at above 9%?
I think it is not about NIMs alone. It's a combination, as I mentioned to you, NIMs, the cost of doing business, the operating costs, as well as credit margins. So I would say when you look at all three, they finally lead you to return on assets and then return on equity. And we clearly will be competitive and at an attractive ROA and ROE in the future.
Okay. There's one criticism, if I may call it that, is the absence of a hero product. For instance, Bajaj Finance is great in consumer loans. Shriram Chola in the CV market used, where Muthoot Finance and gold. This helped the companies grow very fast, get good yields, and still keep their NIMs in check. The asset quality in check. What is Tata Capital's strategy going to be?
So we follow a strategy of not having a single hero, but having multiple heroes. If you look at our housing finance business, it is large and has, the housing finance company has a book size of about 71,000 crores and also has the highest ROA and ROE in the industry. If you look at the past, the ROA has been over 2.5% and ROEs in the housing finance. In the housing finance company, ROEs of about 18 to 19%. If you look at our clean energy business, that business has one of the best quality books in the whole industry. We have very low NPAs and the returns are very good, besides contributing towards a green energy environment. Similarly,
actually, if you could just break up the book for us. 2.33 lakh crore is the book. Break it up for us in the various segments.
So if you, on a broad basis, if you look at the overall book, 63% of our book is retail, and that would be almost equally split between the housing business and the rest of the retail business.
Which is?
Which includes products like loan against property, personal loans, business loan, two-wheeler loans, education loans, used car loans, new car loans, commercial vehicle loans. So we are present in the whole spectrum of the retail business. Besides housing and consumer business, which I mentioned to be about 63%, about 26% of our business is SME. So about 89% of our total business is retail and SME. Within SME also we have multiple products, whether it is channel finance, term loans, leasing, equipment finance. We are present across the spectrum. And the balance, about 11 to 12%, is the corporate business.
Okay. And which of these three is growing faster? What will drive growth for you?
So when we look at growth, the businesses which are growing at a much faster pace are housing, which is the fastest growing business for us. The consumer business, which is also growing, when we look at the past, at rates of over 25%, as well as SME, which is also showing a growth rate of about 25%.
This is for you or for the industry?
This is for us.
Okay, so SME is growing at 25%.
Consumer is growing at 25% plus, and housing is growing at 30% plus.
So let's talk about this merger with Tata Motors Finance Limited. It just got concluded in May this year. So when you took it on, what did it bring in terms of the size of the loan book and even in terms of the asset quality? Because what we understand is that the asset quality of TMFL was actually quite poor.
For us, before the merger, we were not present in the commercial vehicle space. And that's a pretty large market. It's a market with a size of 10 lakh crores plus, with a yearly disbursements of about 1.5 lakh crores plus. We do believe that this new segment will give us another engine for growth in the future. This book, when we took over, was about 28 to 29,000 crores and formed about 11% of Tata Capital's total book.
Okay. And in terms of NPAs, what were the NPAs?
So their NPAs were slightly higher, in the region of about 5% or so. In terms of our approach, as I mentioned to you, we've always been very conservative and have had the NPAs as well as credit costs amongst the lowest in the industry. And that is what we will look to replicate even in the commercial vehicle business.
So do you think it's possible to bring the consolidated credit cost to sub 1%? And how long will this turnaround effort take for you?
So again, we've always been below 1. Our endeavor is clearly to remain in that region itself.
And how long will it take for you to get there, to your mind?
The shorter the better.
Of course.
And I think we should be looking at that happening over the next 12 to 24 months.
Okay. There's a fresh issue of about 6,800 crore rupees. What will that do in terms of your capital adequacy ratios and the leverage?
So definitely, this will help us improve our capital adequacy and bring down
What
leverage.
are the numbers?
So our capital adequacy post the issue should be closer to about 21.5 to 22%, and our leverage should come down below 5%, below 5.
And what will the shareholding look like post the offer for sale and the entire IPO?
So post the IPO, Tata Group will hold about 85.4% of Tata Capital.
Got that. Just talking about the near term, in Q1, your loan growth was, I think, only about 17%. I mean, is there some sort of a slowdown? And what's been the extent of transmission of interest rates?
So if you look at Q1 and you break it up into two parts, the motor vehicle business and the erstwhile Tata Capital business. Tata Capital's business grew at about 23%. Since the merger got an okay from all regulatory authorities in only May, we were not focusing on growth on that. But if you exclude the motor finance business, Tata Capital grew at about 23% plus.
How's Q2 right now?
In fact, the current GST cut has been a big boost to the economy. We have seen the impact of that in the last 10 days. And I do believe with the festive season coming up in Q3, we should have an excellent H2 as far as credit growth is concerned.
Okay, got that. You've priced the issue at 310 to 326. Now, this is lower than the rights issue price of 343, at which Tata Sons and the other shareholders put in money. Why is that? Did you think 310, 326 is fair value? Why is the discount?
I think we did a rights issue just now in July, which is very recent. From our perspective in this issue always is to get a very large retail participation. As Tata Group, we've always followed the philosophy of remaining attractive to retail buyers. And our effort to follow the same process, and that is the reason the board met and decided that we will bring this offer at a price of 310 to 326 and try to get a much larger retail participation.
And final question, Tata Sons will be left with 85% even post the IPO. What are their plans? Will they do an offer for sale again in the next 3 years? Will there be a need for a QIP as you look to expand?
So I think what Tata Sons will do is a decision which they will take. From our perspective, we do believe that this current raise is good enough for us for the next 2.5 to 3 years of growth, post which we will be there in the market to raise money.
Thank you very much, Rajiv, for joining in. It was a pleasure speaking with you. Thank you very much.
Thank you so much.
Thank you.